welcome. Patriot Radio News Hour. Joe and Jason on this Thursday. I hope it finds you well out there. For all of you in the Valley of the Sun, get it done today. The rain is coming. Going to be here tonight, tomorrow. We'll see about the weekend. Early forecast, rain for the Phoenix Open. Yeah, that's going to disappoint about 500,000 people. The biggest party in golf, as they like to say. I will say this, it absolutely is. Nobody goes for the golf, except for the 16th hole, and outside of that, everybody's there just to have a good time. Let's hope Mother Nature gets it done early, but, we'll take the rain whenever we can get it. So if you're going to golf, do it today, because I don't think you're going to be able to do it tomorrow. Our toll-free number, 800-951-0592, the website at allamericangold.com. And Jason, the day after, I guess we need to start getting used to gold being up when the Fed starts talking. That's kind of been the trend. It's not normal. Usually we see sell-offs and all that, but gold getting ready here, right near all-time record highs. TV gold, 2072, spot gold here, 2054, and counting. We have more bank problems this time in Japan. We had the ECB talking about the need to lower rates. Jay Powell yesterday, hey, we're going to lower them, but just not in March, right? We want to give a little more time. We're not sure inflation's going the right way, but we're going to watch the day. This is a guy. Listen, he can't forward think at all. This is why he's a patsy as a Fed guy. How many more meetings do we have to go with him saying, well, we're going to watch the data? That's all he's said since he's been the Fed governor, right? Well, we're watching the data. They sit there and watch and watch and watch and watch. And then by the time they do something, it's always too late. But more watching as we expected. It looks like quantitative tightening, the slowdown, right, getting ready to end it, right? It looks like that's going to probably start in March. So, Jason, I think, as expected, I know the markets wanted rate cuts sooner, but he did say, listen, their forecast kind of letting us know the dot plot. Most of the people at the Fed think they're going to have to cut this year. Jay Powell gave a number of three cuts. So it's not 6, right? It's not 1. Kind of trying to do the Goldilocks, right? Well, we're trying to, get it just right here. But there will not, at least, no, he did say that, the data can make us change our mind. But at least for right now, no rate cut in March. Obviously, they didn't cut rates today, but they did signal, hey, we're going to have to stop or slow down quantitative tightening. And, oh, by the way, don't worry, we will cut at some point this year.
Yeah, I think they'll try to make cuts at some point, Joe. It's like you said, he's going to watch the data. He's waiting to see if inflation's going to sit still or go down, or if it's going to go up. That's what he's doing. He would love to cut rates. That means inflation will stay where it's at or continue to lower a little bit. And so I guess in that respect, he's probably telling the truth. But I'll tell you, I don't know how Wall Street would handle it. But if inflation goes up and Powell leaves rates right where they're at as inflation goes up. Let's just say it goes up a little bit every month, but it doesn't go up dramatically. The markets are going to have to accept it, right, Joe? They're going to have to accept it because if inflation starts to go up even at just a small clip, I don't think the Fed lowers rates at all. They'll have to start considering raising them if it keeps going up. So I think as much as I don't like the Federal Reserve, at least a lot of what they've been saying the last few years, they do what they're saying. So. Don't like it, but
agreed, yeah. Yes, they watch the data. They watch the data, right? We watch the data, right? That's exactly. By the way, the 10-year note, this is insanity. Down 15 more basis points, 3.82, and I think there's underlying tremors in the banking industry. One key thing that they took out of the Fed statement in the statement previously, they kept talking about the U.S. banking system is sound and resilient. That phrase, the U.S. banking system is sound and resilient, was removed. It was not replaced with anything, right? And it wasn't like, wow, we're going to just use different adjectives. Nope, they just took it out. And again, you can speculate on either side, right? One side of it would be, well, we just don't think we need to say it anymore. Or the other side of it is, well, it's just not true anymore, right? You decide which one.
I kind of think the 10-year note's coming down because of market demand. I think these commercial-backed securities are coming due for refinance, and they're saying either refinance me lower or I'm out, I'm done. So even though no matter where the Fed puts the rates, if some of these banks, like the one you mentioned yesterday, is they're having these troubles, right? You know, hey, if they can refinance at the lower rate, that's better than them dropping off and going into foreclosure, Joe, bankruptcy, right?
Yeah, well, the thing is, so when we get back, we're going to talk about the next bank now. So bank number 2, this is a Japanese bank with high exposure to the commercial real estate markets in the United States. Yesterday, New York Community Bank Corp, just got absolutely destroyed. Remember, they were the ones that got Signature Bank's deposits. But we'll talk about that and more, all coming up. Patriot Radio News Hour. Stay with us. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Thursday. A quick look in at the markets. Tough day on Wall Street yesterday. As Jay Powell said, hey, March, more likely than not will not be the meeting that they start cutting rates. So the Dow was down like 300. Wasn't horrible. It was down 300. The NASDAQ was down like 350. Right now, the Dow's down 20. The S&P still and the NASDAQ are still in positive territory. Depending on where you look, gold's up 11, gold's up 21. Doesn't matter. The price is the same. 2,060 on spot gold right now. All the futures context, April's 2,080. All the rest of it, like August gold, 2115. October gold, 2130. December gold, 2145. Silver a little higher as well. We talked about the 10-year note down to 382 right now. Crude oil's a little higher. The dollar's a little weaker. Being diversified, I'm going to tell you again, right? Be careful with the money in the bank. Having a large sums of money in the bank, it's just a fool's errand right now. You need to wait and have. Let's see how this plays out. There's other places to go. Obviously, gold and silver. Give Joey a call, 602-909-9048 over at Northwestern Mutual. They're not a bank. They insure up to $500,000 over there, so that may be a place for you to go. Why refi? Something not correlated to Wall Street. Like I said, it literally would have to be the perfect scenario for all of this to work out the way they keep promising us. And we know their track record, they never get it right. More than likely, there's going to be the minefield. They're going to step on it. They keep talking about watching the data, yet they can never seem to tell us why these banks are having all their problems. Up to 10.25% fixed rates of return. Not correlated to Wall Street, doesn't care about Jay Powell or Janet Yellen, doesn't care about how much debt we go into. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YREFI24. And as you guys know, you got to have a minimum of $50,000. So, yesterday, It was the New York Community Bank Corp that came out and said, well, oh my gosh, we had huge write-downs, a big unexpected loss. They slashed the dividend. The stock finished down like 38%. At one point, it was down 45%. Today, Japan's Azoro Bank getting hammered, saying that their exposures to U.S. commercial office towers, slashing their loans, get this, by 50%. So this is a big problem, right? Because now you've got multiple banks now starting to come out and say, listen, this is what they're worth now, which means all these other banks kind of got to do the same thing now, right? They got to, oh, okay, so let me break it down for you with this bank. Now, this was Japan's 16th largest bank. You know, we talked about yesterday, the New York Community Bank Corp was the 34th largest U.S. bank. But here's what they did. They wrote down the value of its non-performing office loans by 58%. In other words, hey, the loan's not performing. What does that mean? That they stop paying, right? They're not making the payment. And the value, let's just say that a tower, then they had, and we'll keep it simple, they had a value of $100 million on it. Yesterday, well, this morning, yesterday there, this morning here, they cut that by almost 60%, right? By saying, well, that $100 million is now worth, $42 million. Those are huge losses. 63% in reductions in Chicago. 51 and 59% reductions in New York, Washington, D.C., Los Angeles, and San Francisco. It said 21 office loans worth $719 million is now classified as non-performing. And when you think about, what that equates to, that's over $400 million in losses. Jason, that's enough to take almost all of the U.S. banks out of business outside of probably like the top 50 banks. That's how big of a loss that is.
Yeah, I mean, you got to remember that Silicon Valley Bank that closed last year was just as big as any of the banks that closed in the 08 housing crash, as far as dollar for dollar. So these banks have gotten bigger and more bloated and more dangerous when they fall apart. So, yeah, everything you said, Joe, is the contamination of one bank. It's not just one bank that falls apart. These banks are intermingled through their clients or directly through loans to each other. And, how do you think the big banks operate so well? Yeah, they loan money to smaller banks, right? So I know that we kind of laugh about how we'll be down to just 5 banks total. Well, I don't think that'll necessarily happen, Joe, because if we get down to just the biggest banks, at that point, are we going to need them at all? The Federal Reserve is just going to, have a digital currency, and then there won't be a need for banks. This next economic cycle, if digital currency actually becomes the end goal, banking may actually be the casualty of the next economic cycle.
It'll just be for the rich, right?
Yep.
Banking will just be for the rich, and that's where you go. Maybe they'll have the credit cards there, the auto loans, and the home loans, but that's about it, right? And unless you have big pools of money, everybody, you talk about serfdom, right? I mean, Jason talks about that a lot. And what that means is, hey, you don't really need to use our traditional bank. We can just use the central bank. You'll have a Fed account, and we'll just give you money, right? Whatever you earn goes into that account, and then we'll make sure you have enough in there to cover the basics, right? And we'll get you in your 15-minute city. And as long as you're a good little citizen, right, you don't need a car, you can't afford a car, can't afford a house, but, you'll have enough, you'll be able to put food on the table and you'll have a job you get to go to, but that's all there's going to be, Jason.
That's correct. That's correct. I think the monetary system in the next decade may be completely changed from what everybody is used to, and I think there's factors I actually believe that can actually make things better, depending on where the world goes. But generally, we may not have banks in the future, Joe. There may not be a place you go anymore. But it may take a few years. And cash, I don't know if cash will be completely obliterated, but it's going to be very expensive to have anything outside the system.
Yeah, that's the thing. That's kind of, I think, what we and you both agree on. Cash is just going to be too expensive to take, right? That's probably what we have in the future for us, where it just say, yeah, forget it. By the time, if I have to put it in the bank, they're going to whack me 10% or whatever.
It's going to be a privacy tax, Joe. It's going to be cash will be there. It'll be a privacy tax. Hey, if it's 10% to deal cash, that's what privacy will cost in the future, 10%, Joe.
Right. Instead of, hey, you're paying cash, I'll give you a discount. Now, you're paying cash, that's 15% more, please.
Yep.
How about this? And the attitudes of changing in gold, Georgia, Kentucky, Wisconsin, Kansas, now all signing up to lower taxes on precious metals in 2024. All 4 states introduced bills that would exempt precious metals from either state sales tax or state income tax. Jason, this is growing. Arizona is one of those great ones. Arizona, no sales tax here. Part of why we're here in Arizona, so you don't have to pay sales tax when you order gold or silver from us. There's no capital gains tax in Arizona. And this is just coming. State after state after state, Jason, is starting to wake up to the fact that, hey, you know what? We need to give our citizens an alternative and a better alternative to the dollar.
Yeah, well, I mean, some states think that way, but some states are kind of opposite. So, more
states. Let's say this: more states are coming around. You're right, though. There's a lot of the blue states. They're still in the dark ages, but these other states, they're waking up.
The more bankrupt a state becomes, the more they're not going to help their citizens. So you're right. The ones that are doing okay, they know to be reelected in those states that they need to make the citizens happy. Reelection only happens when the people in your area appreciate what's going on there. So yeah, you're right, Joe. If economically things go disastrous, though, even in these states, I'll tell you, the government is not your friend. They'll take away everything they can to preserve their way of life. So. Hopefully, you're right, Joe. There are a few states, the federal government's a lost cause, but there are a few states out there that are still sort of rowing the boat for their citizens.
Yeah, absolutely. We did get economic, it's jobs week, so tomorrow we'll get the government's jobs number, jobless claims up again, 224,000. That's up another 12,000. Yeah, okay, that's higher. I'm not too alarmed by that number, right? I'm like, okay, the trend here is up, but nothing terrible yet. We'll watch, we'll see if this trend keeps growing. The one thing that we don't like, obviously, the continuing claims. Up to 1.9 million. So this one has been steadily rising. We don't get too concerned until it gets, near the 2 million mark, but 1.9 million on continuing claims. So not horrible, but not stellar, but the thing that really shook the market a little bit today, Challenger, Gray, and Christmas, they track the hiring and the announced layoffs. Job cuts, the highest levels in a year, going back to last January, 82,307 planned layoff announcements. That's 136% higher than it was in December. But then the big news was, okay, so layoffs Okay, yep, they were higher financial sector. 23,000 kind of was a big one. Tech layoffs, which I thought would be higher, just under 16,000. Food producers, 6,600. But the big thing was the amount of people hiring. The lowest hiring on record for January, according to Challenger Gray in Christmas. So, Jason, it's early yet, but has a shift started to occur in the jobs market? Remains to be seen, but not a great start.
Yeah, I think those numbers will continue to slowly get worse, Joe. That's just where we're headed. So I think the multiple jobs and the full-time hours are slowly coming off the books, and when you skin it as close as you can, then the last step is you have to just eliminate people, right, Joe? And you stop hiring people. So first-time jobless claims, I think the continuing jobless claims that's going to be the number to watch, because once someone's out, it's going to be tough to get back in.
Yeah. I think the one thing, the hiring has definitely slowed, right? So, right, what comes after? Well, I stopped hiring, I cut hours, eventually, right, do the layoffs. We don't know yet. We'll see. We'll watch it. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Thursday. Today's special, it's a great one. $5 Indians. I will do any time I can sell Indians for less than libs. I will run them. We can do it again today. How long it lasts, who knows? Who cares? Take advantage of it. As you guys know, the Indian series replaced the Fractional Liberty series when the St. Gaudens came around. And then when the original COVID outbreak, right, the Spanish flu outbreak, they stopped minting them. And the $5 Indian got minted the least. It had the infused design. They actually engraved into the coin, and they thought the germs got into the grooves of the money. So between 1908 and 1933, it was only minted like 10 years. That was it. And most of those were the first 8, right? 08 to 1916. But right now, I've got them. 1 through 19 at $5.85. If you buy 20 or more at $580, that puts you at $10 below a $5 Libra. But listen, we got this deal before gold shot up. Gold was actually down this morning. It's up $12. So this is definitely going to be even a better deal because of that today. So $5 Indians, these are the $5, a quarter ounce pre-1933. I think the best coin we ever minted. That's just my opinion. $585, 20 or more, $580 at 800-951-0592. CBS and NBC are reporting that U.S. officials had confirmed plans that have been approved for a series of strikes over a number of days against targets, including Iranian personnel and facilities inside of Iraq in Syria. So the Biden administration letting it be known that they are going to retaliate for the service members killed, but it appears they're going to stop short of attacks inside of Iran. The strikes in response to that drone attack. They said that this will not be a one and done. This will be a series of strikes that will last up to a week. It could be multiple days of strikes against Iranian targets inside of Syria and Iraq. So, Jason, another escalation, but not the biggest escalation, because it doesn't involve striking Iran. Inside of Iran, I guess.
Yeah, well, the talk is very tough. It all comes down to actions. Well, on the half 50 Cup of Joe, we played that clip yesterday where, the target in Jordan was American and American only. There was no Jordanians in any harm's way. It was very specific. So the war drums are beating, Joe. War drums are beating, and this could affect the economy drastically. Joe and I were talking this morning. For years now, you can call it the Biden administration. Let's just call the policy in America has been to stop producing oil, and there's two choke points. There's the Suez Canal, and there's the Strait of Hormuz. And if those things get shut down even more severely than they are now, because they're not shut down yet, Joe and I were talking, there might not be enough decimal points on the gas signs for the $10 a gallon gas that could happen. I mean, it sounds ridiculous, but you can double the gas price if 25% of the oil doesn't come out of the Strait of Hormuz by Iran, and then you just choke it off at Yemen over the Suez Canal.
Yeah.
30, 40, 50% of the oil not getting into the market means probably a 100% rise in price, Joe, maybe more.
And it's something where, and I know, oil right now, 77, 78, 76. Cushing, Oklahoma, which is the big stockpile for oil reserves here in the United States, it's at almost a 2-decade low right now, all the way back to 2008. Right, and think about 2008, the financial crisis, the economy sucked. You didn't need, it made kind of sense that maybe the stockpiles were super low. They're not in great shape if something like Jason was talking about did occur, and all of a sudden there's this big expansion there. That would not be a good scenario, and I think this is probably the reason why you're seeing the government saying, well, we're going to strike targets in Iraq, we're going to strike targets in Syria, and if we kill Iranians that are in Iraq and Syria, goody, but we're not going to actually strike Iran, at least not yet.
They got to time that just right. It's got to be the right moment, the Fed.
I would say do it now. Don't wait. You know what? If you're going to do it in 90 days, that's the worst time, right? Right before summer drive time. If we're going to do it, we should do it now. That's all I'm saying. I don't know if we're gonna, not gonna, but if we are, get it over with now. Well, gas is still cheaper versus waiting, because let's face it, we know in about 60 days the gas price starts going up no matter what.
Well, and that's what common sense would say. If you're going to do it, you do it sooner. That's not common sense. It's all about timing. The Fed doesn't want to lower rates yet, because lowering rates means you have to help the economy. Well, the economy hasn't shown the stress. I mean, something that people don't think about too much, but we use a lot more fuel on election years. Not just because of the election, and there's a lot of traveling going on during the election. And we look at the trucks going down to Texas, the border, but it's also Olympics. And there's just a lot more fuel and energy being used for worldwide travel, because the election year in America is also the Olympics year. It's summertime, like Joe said, so a lot of squeezing is going to be happening to the supply of oil worldwide. And having a Middle Eastern war just fits the bill, doesn't it, Joe?
Yeah, no, record volume to safety occurring in Wall Street this morning. A new single volume record, 1.35 million shares, the largest spike coming this morning. And the flight to quality, this is probably, so when we're talking this massive move in the 10-year note, that is a lot of big money, big investors heading towards the exit, which signals to me that they're worried that, hey, this wasn't an isolated event. The New York Bank Corp, that Japanese bank, and when you take losses like this wasn't, hey, we're going to take a 5% hit or a 10% hit. 58%, right? I mean, almost in some markets, the Japanese bank wrote off 60% of the value of these loans. And let's face it, it's not like these office buildings are cheap, right? These are the big, these are the big, they're buying the big towers, right? The big expensive ones. I don't know. I'll just say this. The money out of the bank and get it somewhere safer. 800-951-0592. $5 Indians, 585, 20 or more, 580. Jason and I will be back with more. One 0592 Patriot Radio News Hour. The Indians are blowing out. I didn't even think we'd have to have this issue right now. We have 50 $5 Indians left. So if you want to pick them up, $585, 20 or more, $580. I mean, we had over 200 to start the show. So gold, by the way, up 16 now, 2065. TV gold, 2084. Silver's up 13 cents here as people, the flight to quality hit a new record this morning as people are starting, Jason, to head for cover here, just in case, right? Is this March revisited, but just coming a little early? I think the biggest thing, it's the amount of the write-downs. It's the amount of loan loss provisions that these banks, not only did they both take huge losses, but then they went and added doubling. Like the Japanese bank took a massive loss and then doubled the amount of loan loss provisions for essentially telling the market there's more losses coming. And I think that's the biggest problem. And when you start putting a number on it, now all of a sudden you start looking at these other banks and saying, okay, you got towers in Chicago, you got towers in D.C., you got towers in L.A., you got towers in New York, you got towers in San Francisco, right? What about Seattle? Are there other parts of the country, right? Is Boston a problem, right? We don't know. And then you start putting, pen to paper. It's actually simple math for guys that know where to look. And that's the thing for the vast majority of us, right, Jason? We just don't know where to look when it comes to these banks, but the guys that know, they know where to look.
Yeah, and these buildings are going to become available at much cheaper prices as this thing gets going, Joe. There's some big money waiting to buy some really cheap buildings, right?
Right. Hey, why not? Hey, you want to buy a tower? Hey, by the way, it's 40%. No, how about 30%, right? 20%, right? At some point, there's great value in it at some point. We just don't know what that point is. The problem is all of the loans that were made, and again, as you know, these aren't things that a lot of these banks can say, hey, we're going to hold them to maturity. They've been doing this like with the treasuries. Right? Hey, we're not going to take paper losses because we're going to hold these treasuries to maturity. We're not selling them. That's not how commercial loans work. By and large, these are huge loans with interest only, with balloon payments. Right? They came down with a deposit, right? Hey, we put 20% down or 30% down, but we're doing interest only, and then we've got a balloon payment. So these can't be washed away and hidden by saying we're going to hold to maturity, because holding to maturity means, well, I guess what, you're going to write a check, right, for $50 million or $60 million? You don't have that kind of capital to do it. So it is, I guess we shouldn't be surprised. And again, it's only a couple of banks. But Jason, it only took a couple of banks the last time to see what happens here. So we're going to have to continue to see and watch how this plays out.
And it might not just be a couple banks this time. This time they may not be able to put enough fingers in the dam, so to speak. So it's we are turning into a nation of renters, Joe. When you talk about those buildings, they're going to be very cheap, and then the only reason that they're still going to be vital is because previous guy was renting from the expensive building. The guy, the owner couldn't pay the loan, and it was $5,000 a month for the rent. By the time these buildings get repurposed, you can get that rent down to $2,500 a month, and then suddenly it's attractive again.
I think, right, if they get cheap enough, that's a great point. If these buildings get cheap enough, somebody will buy it, and then forget about offices. Let's just turn them all into apartments, right? We'll just have high-rise apartments. But, man, that's expensive. That takes a lot of money. So those buildings got to get really cheap.
Real cheap.
For that to happen. I think that's probably the most likely scenario. That makes a lot of sense to me. I mean, I don't know. Let's face it. I'm not an engineer. I'm not in construction. But that sounds like that could be a viable alternative. So we'll continue to see. I wonder if they regret taking out our banking system is sound and resilient today. I don't know. It's going to be something, again, that we will continue to watch and see. But this is kind of the worst place because, like I said, if it was treasury losses, if it was residential homes, right, the banks could say, well, it's okay because we're going to hold it to maturity. And therefore, everybody can, don't worry about it. That's not the case with commercial real estate. And obviously for these banks, Jason, they ran out of rope, didn't they? What will be interesting is later today, I will report it tomorrow, that bank lending facility, it should not be going up anymore because the Fed said, hey, we're no longer going to allow you to make money on it. It'll be interesting if that number grows again, and we won't find that out till later today. We'll report it tomorrow. If it grows again, I'll be a little more concerned.
I think it will. I mean, every month these cheap loans are expiring and being refinanced into more expensive loans, or people are walking on this stuff, Joe. So I saw the graphs of these commercial loans. The next 4 years are bad. I mean, way higher than last year and the previous years as far as turnover in these loans. This is a big year for turning those cheap loans. Yeah, those cheap loans are gone. It's time to get that high interest loan or get out, right? I don't know when. That's not going to stop for years, Joe.
Patriot Radio News Hour, final segment coming up. $800-951-0592. We're down to $35 Indians. That's all that remains. 1 through 19 at 585. 20 or more at 580. And by the way, if you want to know, tomorrow they'll be well over $600. So really good deal today. The 30 that we have left, 585, 20 or more, 580 at 800-951-0592. And again, tomorrow we'll get the jobs number, right? So this will be the government's jobs number. If this is a low number, I'm not expecting a negative number by any means, but if this is a lower number, my guess is we'll see more dollar weakness and more flight to quality. If it's a higher number than maybe the Treasury route that's on right now, that flight to quality, maybe it'll slow down a little bit. And then, of course, we also will get, okay, what's going on at the Fed? Is the banking window that closes March 11th, is that still rising? And then we're going to have to look at the discount window because that number started to rise. And remember, the Fed now is trying to say to all the banks, hey, listen, why don't everybody use the discount window? That way we can hide the fact that that's a bad thing. But Jason, it doesn't give you the warm fuzzy that the banking system is sound and resilient right now.
No, and like I said earlier segment, I think the banking system is going through its biggest change ever in the next few years. So I think it's going to be completely different. And by the year 2030-ish time frame, Joe, our banking system is going to be a completely different situation. And I really do believe privacy is going to come at a premium. How much freedom can you afford? And whoever's been buying those $5 Indians is buying up a whole lot of freedom, Joe, because some of your freedom has to be bought today so that you can have that freedom tomorrow.
Yeah, it's something where this is kind of what happens, right? And it's not a surprise. I know it's not a surprise to the bankers, right? Fiat money, it expires. There's an expiration date on it. The thing that we don't know is what's the date, right? It's not like when you go to the store, you buy a gallon of milk, right? They stamp the expiration date, well, the sell-by date. They stamp it right on the carton for you, so you know, hey, this is safe until this date. When it comes to fiat money, Jason, they know it always goes to zero, that there's an expiration date on it. What they don't tell us is what is that expiration date?
And I think other currencies, paper currencies, have lasted better than the Federal Reserve Note. They talk about how long the Federal Reserve Note has lasted. Well, it was bankrupt in 1933. It was also bankrupt in 1971. They printed too much before the Depression. It went bankrupt in 1933. They printed too much leading up to Nixon in 1971, saying, we're going to delink it from gold. We really should just change that to, Joe, to we printed too many Federal Reserve notes, right, and now it's failed. So here we are. It's amazing that they've pulled the wool over the eyes of the American public and the world that since 1971 we haven't had another failure in the Federal Reserve Note. So, yeah, the Federal Reserve Note's still around, but this is the third try, and we're looking at the fourth try coming up, Joe.
800-951-0592. Jason and I, we're coming right back with the half-empty cup. Stay with us.